What's up everyone, George here. So do you have some extra cash lying around and want to start investing with it without actually waiting 10 years to see some type of return? Well, in today's video, I'm going to show you where you can invest in to guarantee yourself a return and even get yourself a Lambo. So let's jump right into it and show you where the best place for you to start investing in is. Right off the bat, we have a place where all wealth managers love to throw your money in that you pay them to and take all the credit for making you good amount of money back. The index funds. Now, all index funds are a big group of stocks in one singular fund. So let's take one that is really well known, the S&P 500. The S&P is comprised of big companies like Tesla, Google, Microsoft, Facebook, etc. So when you invest in these funds, you actually invest in all of these companies, not fully, but percentage-wise. So let's say one of the stocks goes down 5% and another stock within the fund goes up 6%. And for this analogy's sake, let's say they're all weighted the same. You would technically be up 1% in the day. Now, this is why index funds are so appealing, because they're very diversified and pretty safe compared to a lot of other investments. And that's the main purpose of index funds, steady return with low risk. Just look at the past 50 years for the S&P 500. It's almost averaged a 5 to 7% return yearly. That's ridiculous for somebody not actively managing anything. You just throw your money in and you're like, oh, thanks for the 7 to 10% a year. And the best part is, you didn't pay anybody to manage your money. You did it yourself. You took your money, you threw it in that fund. Goodbye, thank you for the returns. Index funds are an amazing place to store your money and have it grow consistently without worrying of it vanishing. And the only real downside is, well, it doesn't provide as much of a return as some singular stocks, investing in just one particular stock. But you also don't get the risk associated with that. So overall, index funds are a great place to start investing. Next up, we have the passive YouTubers' bread and butter, dividend stocks. What these stocks basically represent are companies that reach their potential. They have no real desire to grow to the biggest company or offer some revolutionary new product. They're just consistent on making profits. And what do they do instead of reinvesting into the company? They pay out some of their profits to their investors, which is a dividend. Now, these payouts are different based on every company. Some are 1% and some can even go up to 10%. And they're usually paid out quarterly, while some companies do pay out annually. So you can really see how putting money into this could really be a nice source of passive income. Every month you make 3 to 10% of what you invested in. That's not a bad source of income for doing nothing. Now, for those of you that are scared and thinking, how could they sustain paying out their investors every time consistently? Well, for that, we can look at the dividend aristocrats. These stocks have been paying out their investors for countless amounts of years, 65 plus in some cases. They are the gold standard of dividend stocks. Very low risk and super consistent. Look at any major crash, dividends hardly even move. They might go down like 1% or 2%, but in the grand scheme of things, compared to the rest of the market, they don't really budge. Now, you must be asking yourself, George, what's the downside to investing in dividend stocks? I get 1 to 10% return quarterly for throwing my money in? That's not bad. Well, taxes. The dividend payment you get every quarter is taxed as income. So every time you get that, it's taxed. Now, for some people, this might not matter, but if you don't have that much in a dividend stock and you're getting paid roughly 1%, and then you have to pay some of that as income, the payment might not even be worth the low risk to you. If you don't have enough money invested, you're not getting that much back. And for the low risk, you're getting a low growth potential. So the stock itself doesn't really move, like I said. It doesn't go up much, it doesn't go down much. It just stays where it is and pays out 1 to 10% in some cases. So if you're really looking to grow your wealth, if you don't have a big cash sack to sit on, then dividend stocks might not be the best place to invest in, because you're not looking at big returns in the future. You're just looking at that consistent dividend payout. But hey, if you do have a lot of money and you want to retire, throw it into some dividend stocks, sit back, drink a margarita, and collect it every quarter and just relax. No need to stress about your dividends going away, the stocks crashing. You just take that 1 to whatever % return and you collect and have a good time. Finally, my favorite area to invest in are individual stocks, one and done. Now you might be thinking to yourself, why would I invest into a singular stock when I could invest into an index fund that has those other stocks within the fund? While you're not totally wrong, you're not totally right. You don't fully own that share 100%. You own a fraction of it. So at maximum, with a lot of these index funds, you own 10% of that share. They're all weighted. So it might have like 100 shares in an index fund, and it'll be like 1% of this company and 10% of this company. So you don't technically own 100% of that one share. You own the weighted amount, that percentage amount of that share. So it's very different investing in an index fund and a singular stock. So let's say Google invents some crazy new invention and it moonshots. It goes crazy. It goes up, I don't know, 100%. You, as a singular stock owner, you go up 100% with it. But let's say you're in an index fund that only owns 10% of that. You're only going to profit 10% of that 100% moonshot. So you still make out really good, don't get me wrong, but you don't get all of those potential gains. And if you have high conviction in a stock and you've done your research and you believe in its leadership, its tech, its whatever, then to me it's worth the risk for the potential gains to your investment account. And don't get me wrong, you don't have to oversimplify your investing strategy by investing only into one company. You can diversify, like jumping into some tech, some bio, some retail, some commercial. But in my opinion, just don't overly diversify, because then you're spreading yourself too thin. And if you're going to do that, in my opinion, it's better to jump into an index fund, even a more high risk index fund like QQQ, something that has a higher rate of return with more potential risk. But like I said, if you've done your research and you're consistently staying on top of that company, then by all means, invest in that company you believe in, because the potential upside to a successful company is much higher than just investing into an index fund. Most people that turn small sums of wealth into large sums don't do it by investing into Dividend, don't do it by investing into index funds. They usually do it by investing into a good company that just blew up because they knew it. They had that conviction. They could foresee the future. And I know all of you want me to say is invest in AMC, get GameStop, jump on that rocket ship. And while yes, these stocks do have that potential massive explosion, they're not that consistent, right? You're not going to always find these gems that go up 1,000%. So when you're looking into stocks and you see that, just remember, it's not how it happens a majority of the time. And if you start to hope it does, then you're going to have a really bad investing experience, because having a 10 to 20% return in a month is amazing, but you can't expect having 100 to 200% return every single month, because then you would be the richest person in the world. But then again, that's the benefit of owning an individual stock. You could happen to jump on that next GameStop train and just 100x your money. You don't know sometimes. And to me, that's the fun of investing. Based on your style, you can invest where you want. Do you want minimal effort and good returns? Index funds. Do you want low returns but super low risk and consistent payout? Dividends. Do you want medium to high risk and high to medium returns? Singular stocks. They all have their pros and cons, and it all depends on what your investing strategy is. So let me know down in the comments below what your specific investing strategy is. Also, if you're interested to start investing easily and safely, links down below. Remember guys, this is not financial advice. Do your research before investing in anything. Thanks for watching, and I will see you guys next time.